Welcome to Burgess Rawson from CBRE Around the Grounds Portfolio 177. Welcome Mike Vanstone, Natalie Couper and Adam Thomas.
Thank you, Ingrid.
What an auction it was last month. I don't think I've seen anything like it in years.
Crazy.
91% success rate, yields from as sharp as 2.9% all the way up to mid sevens, something for everyone from a price point of view. Mike, you had quite the event in your room. What happened?
We had an auction that went for almost an hour and a quarter, 290 bids. Never
And what was the
experienced it.
property?
It was a fast food
Yeah, and fuel.
and fuel.
That site, I mean, Greystanes is such an in-demand and growing area.
In
And
Western Sydney area.
when you add a McDonald's together with a fuel, the investor appetite has just been so deep, hasn't it?
Very deep, yeah.
And Natalie, what happened in the Victorian room? And we had a large number of properties.
We had such a huge number of properties. And I think following on from the Sydney's auction with the appetite around McDonald's, we had the exact same thing happen in the Melbourne auction room with another McDonald's. First one in Victoria, and I can't remember how long, Ingrid.
I think it was 3 or 4 years, and brand new, freestanding. I think that they were aspects that absolutely drove buyer inquiry. But the other good thing about it was that site had a couple of different offerings. So we also bought the Eljana on that site to sale as
Exactly
well.
right.
And so investors had optionality depending on their appetite for yield. But Adam, you took home place number 2 at 3.96%. Tell me about Indrapilli.
Indrapilli's, that's a triple net lease to Good Start. And what we saw there was the long-standing or the established centre on a very large unencumbered site of approximately 2,300 square metres.
That's huge.
It's huge, and it was medium density residential zoning at the same time. So there was
it's a bit of upside I'm hearing there, Adam.
Absolute upside. So land banking with that future redevelopment potential.
But with good rent all the way through.
Great rent and the best and most sought after tenant and covenant in the marketplace
So
today.
that's good start.
Good start, yeah. So
And you've got some other good starts coming this market, don't you?
We do. We've got Astley Brighton and also another one in Indooroopilly as part of our 5th of August portfolio auction up in Sydney.
Fantastic. And so I'm seeing here as well, obviously we bought such a range of property. We had childcare, fast food, fuel, and one of our highest clearance rates. What would be the standout to you, Mike, that you saw in the auction portfolio?
Oh, it would have to be the fast food service station in Greystanes. And no doubt, that was just an amazing auction. And it really shows that it doesn't matter what value a property can be, you can still get great results under auction conditions. And we saw that with 3.97%. It was an amazing result for the owner. And it just shows auctions are the best way to achieve the best price.
And we also saw some really strong activity in the medical. I know that Traralgon Nat transacted at a very sharp 5.1%. And do you think that that's to do with the sticky tenant and the tenant fit out? What is driving that?
I think people are also starting to look outside Metro Melbourne locations as well and looking at key other sort of destinations, which Traralgon is, a regional location, but it is one of the regional hubs certainly there in that sort of southeast sort of pocket. Certainly in that particular location, they also had an ingoing purchaser of the stamp duty reliefs as well. So here in Victoria, obviously we're at 6%, but with the added bonus of buying in a regional location, we do have the ability to then have a 50% reduction on that as well. So that does add into the buyer pool, looking at, well, I can sort of add that sort of savings into then putting that towards the actual property purchase.
When I went around the auction rooms last campaign in 177, I could not believe the amount of people in the room. But, Adam, I know you were there, the Victorian. Have you seen anything like that?
Haven't for a long time. And I was based in Melbourne for 12 years and relocated to Brisbane 3.5 years ago. And there's a real sense of anticipation. And I believe investor confidence is the strongest that it's been in the last 18 to 24 months. They're sort of forecasting some imminent cuts to the cash rate. So
I think also is that you and I have talked a lot about replacement value, and with the Victorian build cost being so high, a lot of these properties are transacting at less than land plus replacement cost.
Exactly, and then you've got the added benefit of the depreciation as well. So I think if investors are really looking to secure an investment now is the time before there's a real run and further compression in yield at the same time.
The energy in the auction room, not just our last auction, the auction before too, was amazing. Like there was
I saw retail convenience has changed substantially. I mean, retail convenience was something that, being the fuel was something that, post-COVID and with the interest rate rises, there was a softening of the yield by probably up to 75 basis points. And yet we've seen fuel now transacting at low fives and sub fives. What do you think is driving that?
key locations, I reckon. Key locations.
Huge land holding.
Yep.
Huge land holding locations, as Nat said, and we just don't have the infrastructure for the
electric
for the EV in the fleet at the same time.
Jamie would love to hear you say that.
And we saw that with Moonee Ponds. I mean, great lease structure, great location, new tenant, long-term lease, and just an essential service.
Sorry, I think the theme there, though, Adam, is triple net. So Moonee Ponds OTR was triple net. And then you're telling me as well that you're seeing the same sort of results even in childcare. What the theme there seems to be is triple net. Investors take a lot of confidence from that.
They do, and if you can get it, they're the sort of holy grail of lease structure at the same time when you've got that blanket recovery of outgoings, including management fees, structural capital expenditure. With new centres, there's probably not as much tenant risk from a triple net perspective in terms of ongoing maintenance for a brand new build at the same time. So when you have a triple net lease on an older centre, more established centre in a location, then it really does give the investors the confidence that the tenant will remedy any type of maintenance or repairs required.
And we also had property in Tasmania, New South Wales. We also had property in South Australia. Nat, how are your clients viewing South Australia at the moment? What's your general feedback you're getting from your clients about South Australia?
There's always huge appetite for South Australia.
And why is that?
The ability not to have to pay stamp duty on purchases. Obviously, you do have to pay for registration of titles and stuff, which is a minimal amount, but they're factoring that into their buying power. They're actually putting that money towards actually the property and not just a duty that's imposed, obviously, through the purchase. So, when we do have childcare come up, and not just childcare, but other assets, certainly, this huge level of inquiry.
Yeah.
And what I love about the auction is that it really is the litmus test of the whole market because there is something for everybody. Every category is displayed. Do you think yields are sharpening, Adam?
Yes, I do, and every category and also every price point at the same time. So you've got entry level up into sort of $18 to $20 million assets and everything in between. So yields have sharpened and will more likely continue to as a result of these forecast cuts.
So is that a buying opportunity now because you think they're going to get even sharper after the interest rate cut?
And we've seen that in regional locations because that's almost the first place. If investors can't buy in metro locations for their sort of yield hurdle or target yield at the same time, they'll look to move to these larger regional and sub-capital city locations and invest them. We've already seen that with Traralgon, the medical centre there, and that was, from memory, a 5.1% yield at the same time.
Just an incredible outcome.
And also I've consistently seen that in the last 4 to 6 months. I've consistently now selling regional childcare in the 5s and even in the 4s.
And do you think if we have an interest rate cut, that will sharpen more?
Totally. Right now, we've got a small window before a interest rate cut. So what I'm sort of telling buyers now is that you've got a small window now to buy a childcare or another investment before the interest rates come down because there's going to be more buyers, more competition, which is going to push yields down.
As absolute real estate experts in this room and people who have transacted some $2.7 billion worth of childcare, our investors really want to know what you want and what you would do. So, Mike, I know you can't buy your own stock, but let's play a game. I'm going to give you $5 million. What are you buying in auction 178?
I would definitely buy the Indoor Pili. Good start because of the triple net lease.
And the tenant really as well.
And the tenant.
Just incredible property.
Great location.
Yeah. So it ticks all the boxes. Set and forget.
Nat, I'm going to give you $10 million. What are you buying?
Double it. Me and Adam will put our money together and we'll go to WA and we'll go and look at the Coles in Mayland.
And why?
For me, I just don't think you can go wrong with a Coles tenant. I just honestly don't.
And also, I think that one as well, the great thing is it's very, very close to percentage rent. It's a really high quality lease, performing store as well. Like, I don't know, Mike, I think I'm trying to decide, but I might be going with the Coles with Nat, maybe buying a share with her.
Me and Ingrid
Oh,
are
no.
buying that. That's what we're doing. We'll put our money together. Sorry, Adam, you're out now.
No, it's
What are you
okay,
spending
'cause
your
I was
money on?
charging you mez on my 5 anyway, so I was getting 8.5, 9 on my 5, so that's fine.
What are you doing with 5 million, Adam? What are you buying?
With 5 million, we can't buy our own stock, so that's I'm buying a medical asset at the same time.
And what are you looking for in that medical asset? What are you thinking?
I'm looking for a high tenant fit out. I'm looking for whether it's imagery or whatever the case may be, because that'll ensure sort of long-term tenant tenure at the same time. So for me, medical, we've got an ageing population at the same time. So I think that the focus on these allied and medical assets will continue into the future.
Fantastic. Well, thank you so much for joining me today. 177 was an incredible auction. I can't wait to see 178. The investor appetite, I think, is strong. It's going to be there, and it should be a great day. But thank you for joining me.
Thanks,
Thanks,
Ingrid.
Ingrid.
Thank you.